We pray for better days.
For every trade, there needs to be a plan. Take it from me, the number of times I've went into trades without a plan, I've made profit and then I've held on for too long and lost money or too many to count. If you have a plan, this stops this from happening. There needs to be 4 things that you do every single time that you enter a trade. It's advisable to write these 4 things, the parameters for these 4 things, which I'll explain in just a second, down in a little book before you do anything, i.e. keep a trade diary. So the 4 things that we just spoke about, the first one is a predefined amount of capital. So you'll have your total trading account, you'll have the total figure in there, only use a certain percentage of that, and of that certain percentage, never ever put to risk more than 2% per every trade. That way that you can lose lots of trades in a row and you still won't wipe your account. So it's an excellent idea to do that. So number 1 is a predefined amount of capital. Let's say you've got 100 grand in there, you maybe want to use 5 grand per trade. I leave it up to you, just as long as you never go over more than 2% risk per trade, okay? Of that 5 grand, it doesn't matter, I know that that's 5%, but because of where you put your stop loss in your trading order, that will only mean that 2% is ever risked overall, so you'll only ever be risking 2 grand max on every single trade. And that way, you can't blow your account unless you lose very many trades in a row, so it's very, very difficult to do. Remember, you're playing the casino, you're playing against the casino using its rules. If your edge is that you win 14 times out of 20, that means when you stake 5 grand, 14 times you'll win, 6 times you'll lose. You can't know for certain when those times are going to be, so you don't want to risk too much money. Okay, so that's the first thing. Don't risk too much capital in any one trade. The second one is plot your entry. So what lots of us tend to do is we get excited, we see something's going up in value and we want to put a market order in for a trade. Do not do that. Market orders will give you much poorer, well, there's much higher fees on them. As well as that, they'll give you what the market makes available to you at any one time. If you're buying a big amount of something, you'll push the price up. You might get a little bit less than you bartered for. If you choose a limit order, it might take a day, a few weeks for the limit order to be fulfilled, but you know exactly what price you're buying for, and therefore you can better figure out what to expect in terms of profits and things like that. The third thing that's totally advisable is to have something called a stop loss, and this is a beginner's mistake if you don't have a stop loss. A stop loss is just an automatic order to sell your asset, whatever that might be, whatever thing that you've invested in, that will trigger whenever price hits a certain level. So you want to look at the chart, figure out a level where you think that the trade is not going to work out anymore, be that below a line of resistance. I'll leave that up to you. It gets into a little bit of technical analysis and know-how at that point. Just make sure that you have one, and please, for the love of God, I've done it too many times. I start to move my stop loss down whenever the ticker moves down with it, and that just means you lose more and more money. Remember, you've got 1,000,001 opportunities to make money out there. As long as there's volatility in the market, there's always an opportunity to make money. So don't go chasing trades that you think are going to lose. And finally, number 4, please have a profit-taking strategy. This is the main reason why people don't make money, all right? Because they don't take profits when they're up, they cling on, they get greedy, and then eventually they lose out. So what a lot of people like to do is they like to say, okay, at this level, I'll take out 30% of my money. That way you've already locked in some profit no matter what happens, even if it retraces back down again. Then you'll say, I'll take another 30% out at this level and I'll leave 40% in and I'll just let it run and see what happens. No one has ever went bust from taking profit. A lot of this is just psychology. If you use these 4 things, you'll become infinitely more profitable as a trader overnight. Trust me, it happened to me. I read it in a book many moons ago and it just happened like that. I was doing okay, I was ticking along, plugging along, and I started doing a lot better for myself just as soon as I learned these 4 things. So I hope they're helpful to everybody. Thanks for watching once again. Hope you have a lovely evening. I'll see you later.